following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And eagle-eyed listeners and viewers may have noticed some tweaks to the old OptionsInsider.com today when you surfed on over this morning, and we've certainly made some upgrades over there, so maybe we'll talk about those in a few minutes here on the old show. But before we dive into that, joining me here on the old All-Star panel is the man from the pit, a.k.a. Mr. Seabass, one Mark Sebastian from OptionPit.com, and I know how much he loves combining that nickname with his last name, which is why I like to do it as often as I possibly can. Seabass, welcome back to the show.
It's good to be here. Yeah, I was going to say, people will be able to see your website as long as it's not hosted by GoDaddy.com, in which case they will not be able to see your website.
Yeah, some internet issues going on today, and we'll dive into those in a little bit, but yeah, some fun stuff for the internet's largest registrar. Kind of scary as well when you think about it, how one little, looks like, I don't know the specifics yet, but it looks like one little underground hacker was able to knock them offline. Pretty scary stuff. But oh yeah, and also joining us on the old All-Star panel, back from his pilgrimage to the land of corn, good old John Grigas from Options Express. Mr. Grigas, welcome to the show, sir.
Yeah, good to be back. Took the holiday bike Monday off last Monday, and all the corn's dead by us, so nothing to report there. But yeah, interesting market today, with interesting week coming up, I should say, with the Euro decision and Bernanke speaking on Thursday, and last week's unemployment. Maybe that's why we see some strange things going on in the volatility sector, which Sebastian could fill us in on.
I think without further ado, let's dive into those strange goings-on in the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, where we dive into what was moving the old markets today, what was happening on the old street. And I had a bit of an interesting awakening today. I don't know if it was GoDaddy related or not. I'm going to say that perhaps it was, just to be charitable. But I came to realize today, purely by accident, just how dependent I become on LiveVol over the past year. So that's like my centralized hub for most of my activities these days, trading related. So when I can't access LiveVol, and LiveVol was indeed down all day today, I felt sort of blind. Granted, I can get that stuff in other places, but that means I have to surf over here to get this and over here to get that, and it's nice to have it all in one convenient hub. So not being able to run my LiveVol screens throughout the day, I just felt like I was a little bit naked today. Did you have that same feeling, Mr. Sebastian?
I get that exact same feeling. I've got a feeling. I'm stuck on a feeling that I'm in deep.
I think you just feel. I think you just feel naked a lot. That's just your this par for the course for you. I think.
Yes. I have many a dream where I'm. You know that old dream where you're giving a public speech and you're naked. I actually have that same. I see the whole world that way, except instead of me naked, everybody else is naked. So believe it or not, I do not see clothes on anybody.
What a charmed existence you lead, sir.
I know, it's good to be me. Well, sometimes it's good to be me. You should have seen what happened when I walked in that Weight Watchers meeting. It was terrible.
Stay away from that. Maybe stay away from. Nah, that's a dangerous road. I wouldn't even go down that. That's.
I have the Matadors dancing at Bulls games. Oh my gosh. It's like the worst.
That's a good place to avoid as well. But yeah, so unfortunately I was really unable to keep my handle like I usually am throughout the day on exactly what's going on. I was able to parse it through. But yeah, it was mostly an unch day on most of the major indices today, closed mildly down throughout the session. There were a few notable standouts like Intel that were down pretty aggressively on the day. But for the most part, it was a relatively mild day on the street, except when it comes to the land of vol. Why don't we dive in and start with that, because VIX kind of disassociating from everything else today and is off to the races on a whole nother level today.
I think that with this GoDaddy thing, we did see your Apples, anybody that's involved with hosting or different things like that, that even could be perceived as doing that, got beat. We saw Apple actually get sold off 2.5% by the end of the day. Google got lost 1%. We saw some major selling, and then, the S&Ps are down 8, half a point, but we saw a serious rally in the VIX up to 16.25, mostly on the GoDaddy news. I think that scared a lot of people, and rightfully so. I mean, we're about to have 1 million websites drop, and that's a pretty big deal. So, that's something I think everybody needs to be aware of.
It's funny. We've been talking a lot, and the listeners, if you haven't had a chance to listen to it, I encourage you to check out the return of Vol Views, which came back this morning live after a nice summer hiatus. And we talked a lot on that show and on previous episodes of the Option Block, even about the implied versus realized disparity that's been growing of late, and how realized it's been essentially non-existent in most of the major indices, and it wasn't exactly a big factor today, yet the VIX just off to the races regardless. And it's interesting to see, we've talked so much about people coming in and trying to capture that discrepancy and blasting away on implied whenever possible, and this is one of those times when our oft unheeded warnings to not do that certainly would have done well to heed those warnings going into this weekend and coming into today, where VIX just on a rampage, if you will, off to the upside. I have to wonder if it's more than just GoDaddy lurking behind the scenes. Of course, we don't really know what the truth is of that scenario yet. It still seems to be pretty broadly unfolding right now in the news.
Yeah, is that relatively new news? Because we didn't hear about it at all on the desk.
Yeah, I think you're definitely going to see some rallying with German High Court and QE. I think those are a big, big deal, and they matter. And another thing that we're going to have to be aware of is that, there are events. I think everybody maybe got a little sugar rushed on the Fed may do QE, and kind of needs to figure out that, hey, maybe they won't, and maybe they shouldn't. Long term, that's super bullish. But near term, I think that's really bearish for the economy. So, and by near term, I mean, I think through Friday, we're going to see some volatility. But there's no way I'd want to be long term short this market, because I think no QE is super bullish. Even if we don't, because we don't need the stock market to go up despite inflationary tactics. I think what the stock market really needs is regulatory clarity, tax clarity, and if you want a stimulus, tax salad.
I'm assuming John OX hosts her own stuff. That's just the safe way to do it in this day and age. But GoDaddy, they're a registrar, and you have to register somewhere. So if that even a registrar can blow you offline, that's pretty scary business. So, John, aside from this GoDaddy story, which appears to be unfolding as we speak, what else was lighting up the tape on the old desk today?
Yeah, everyone's trying to position themselves after that jobs number from Friday. I think the street was expecting 120 to 140, came in around 96 or just shy of 100. We got a lot of upside premium sellers that are getting a little nervous that, this rally, that we saw, was that Thursday? Dow was up 240 points. They're a little worried here that this thing actually might have some legs. I know the volume really hasn't been there, but we've been saying that all summer. We've had this rally. Where's the volume at? As it continues to creep up, and then you get a day like Thursday where it's up 240 points. A lot of upside premium sellers are wondering if this QE3 thing goes through, what's really going to happen, because all summer they're saying it's not going to happen. We get this one jobs number, and now it seems from the articles I read this morning and some of the analysts in the House, they're saying it's going to happen. Not that it's going to have any effect, because every time that they have a new quantitative easing, it seems to do a little less to the economy. Interest rates are 10-year note closed looks like 6.5%. I mean, how much lower can these yields go? I mean, how is that going to spur someone to go buy a house when they've been down there for years now?
It is kind of funny because you're right. We have been joking off and on about the Bernanke put and how this thing has been lurking in the ether for a while, but it seemed very, very distant and not too probable. But you're right, over this past jobs number and now with some of the chatter today, it's starting to seem like it might become more of a actual reality in the coming days, because if they wait till Wednesday to find out exactly what the scoop is there, I personally have a hard time envisioning him really going deep down into that well again. I don't know about you, John, but it seems like it was such dangerous waters the last time they went into them, and now just doing it again for the sake of doing it almost. I don't know if that's really the right approach. Of course, we've said many times here on this show we tend to lean libertarian in all of our stances in terms of a hands-off mode from government. So maybe that's coloring my lenses a little bit. I don't know. How do you feel on all this, John?
I'm the same way. I mean, I think hands-off. Look at the Dow. I mean, we're only 1,000 points off our all-time high, and the economy from an equity standpoint is back. Okay, we have an 8.1 job percent unemployment, still hurting there, and there's some other things. But let's get on our feet with our own, by our own moxie, to use Sebastian's term. And the problem is too, you have an election year. It's going to look bad. The pundits are going to grab onto it and say, "Oh, this QE3 was only done to bolster up Obama," and the politicians don't use that. They don't do that. They're stand-up guys. Yeah,
can you imagine the field day the Republicans will have with this? If they do indeed do a new QE3, it'll be completely painted as a totally political move, and it'll just be the Fed doesn't like to get into those waters if they don't have to.
No, I don't see a lot of upside, so I'm hoping that he sticks to his guns and just lets this one pass.
Of course, we chatted about this on the show before, too. A lot of this just still has to work its way out through the system. There's not much the Fed can do about the fact that there's so much housing stock sitting around. That stuff has to just be worked out of the system. Rates have been non-existent for years now, and there's still a lot of supply on the market that has to be churned and burned before these things can turn around. Same thing with jobs. That things have to kind of sputter to life before new jobs can really start coming into the system. So what the Fed can do to really move that along, I'm not sure. That stuff has to kind of be worked out. In fact, the more impediments the Fed kind of puts in the way, the longer that stuff takes to actually correct itself, So it's interesting, that, we've heard this talk bandied about quite a bit. It seems to be, you're right, much more so today, perhaps alarmingly so today than it has been in the past, but still, interesting stuff to discuss. Speaking of interesting stuff to discuss, there were a few movers on the street. Most of them, like you said, John, really in the tech side of the fence. Apple giving up quite a bit, about 2% on the day ahead of their big announcement on Wednesday. You're talking about the Fed on Wednesday, but I think all eyes on the street and elsewhere will be really glued to Apple. Apple is its own index. It's its own economy in this environment. And what do
you call it? The triple Q Apple, or what was your
I called NASDAQ Apple Plus.
Apple Plus. Yeah, there we go. I mean, I heard they're going to do something revolutionary. They're going to increase the screen size. Never been done before. So we're going to look. We're going to keep our eyes peeled out for that. Revolutionary.
Yeah, good thing Tusa isn't here to debate you on this one. But yeah, it seems like they're definitely playing catch up a lot. Larger screen, perhaps LTE, perhaps a lot of things that we've seen before in other handsets. Like I said, I'm rocking the new Galaxy S3, which I think definitely is superior to all existing iPhones. Whether the new one can reclaim that throne or not remains to be seen. But interesting stuff. Of course, it's the Apple game is so hard to play because all the pundits and all the analysts and everyone else slammed the iPhone 4S last year as being an incremental update. It really didn't mean much at all, and yet, look, the sales were off to the races, the best-selling iPhone, the best-selling phone of all time. So what the analysts and what the quote-unquote experts have to say really is moot next to what the people voting with their dollars say, and they tend to buy this stuff en masse.
Apple has their mindless group of freaks who are allegedly anti-establishment, but are actually super establishment. So that's the thing you've got going on there.
It is funny to see how those companies have flip-flopped, and Microsoft used to be the big bad guy 10, 20 years ago, and Apple was the rough and tumble and little cute, clever, perhaps little upstart vying against the giant, and now it's completely the opposite, and we see how even a little upstart company can become evil when they become successful. Intel
Apple, all they do is go and sue you in court for patents. I mean, they're going to slow down. They are literally going to slow down innovation in that whole, in the whole cell phone industry. Because why innovate if you think you're stepping on someone's patents? It's terrible.
Well, I think part of that too is just part and parcel of how the patent system in this country is just broken. I mean, Apple in some ways I can kind of see what they're doing here because they have these patents, they kind of have to defend them. But the fact whether they should even have these patents to begin with is probably the root of the discussion. Whether these things should last 17 years in a mobile industry where the phones evolve every 1 to 2 years. I mean, 17 years is a lifetime in the mobile industry. So there's a lot of questions about whether these processes and very broad patents should even be issued to begin with. And, once Apple has them, they kind of have to sue to defend them. But the fact that whether they should even have them to begin with is probably a more relevant conversation to have in this day and age. Of course, Intel getting hammered today too off downgrading their guidance, and the street not loving it, knocking them down about 3% on the day today. If I had my live vol today, I would have been able to dive in and out of some Intel options. I was a wee bit busy today anyway, but still, Intel, my old baby, my old stomping grounds. I love to watch this one. Not really the bellwether it used to be, but still fun to watch.
Yeah, I mean, I think there's an interesting one was HSP. Somebody bought 5,500 of the October 40 calls for 50 cents. This Hesperia, kind of interesting. Yeah, 15 cents all trade through the system. What do you think about that trade?
I'm looking at it right now. This Hesperia, I'm not too familiar with one. They're a pharmaceutical company. Looks like someone, loving the upside on this one. This one has a range of down in the 27 handle up to, actually it's been over 43, about over 42 over the past year. So not exactly out of sorts for them, but still someone piling in with some love. Speaking of piling into upside with some love, maybe it's time to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, where we break down the interesting and unusual options activity that's been lighting up the old tape today. And we touched on one earlier in the trading block, Hesperia, an interesting one, showing a lot of upside love in that pharmaceutical name. We also saw a lot of call activity in Talisman Energy as well, ticker symbol TLM. This is the name that had some drama of late. This is a global diversified upstream oil and gas company, and they had a lot of drama because they announced today that their CEO has agreed to step down immediately and be replaced by an interim CEO. You gotta love, I'm sure it did wonders for his ego, Sebastian, when he announces that he's stepping down and the stock just goes off to the races. It's got to be just a lovely feeling for him.
Not a good thing at all. But it shows you how bad of a job you've been doing.
Yeah, exactly. That's a little bit of a sharp reminder of how exactly you've been faring. Well, we saw a lot of call activity today in TLM, with calls averaging almost 7x the ADV today, with about 6,000 contracts total on the day going up. The biggest lots we saw were in the SEP 14s, with about 2,000 being blasted out on the bid for 99 cents. Only about 1,600 open on that strike, so this is mostly opening positioning here. So people may be thinking that today's pop is a little bit too good to be true and coming in to either overwrite or sell against some underlying or just blast some calls out in general. We also saw SEP 16s trading about 3,000s. These were a little bit more mid-market, closer to the offer for about 15 cents. There's really no relevant open interest on this strike to bear at all. They're both blocks. They were very close together, actually, but they don't appear to really be trading off each other. The size is a little bit different. The times were a little bit off. Still, it makes you wonder. These appear to be a lifting opening buy, so it could have been someone doing a ratio. If they were linked, it could have been someone doing a ratio sale on the calls here with a little bit more of an upside kicker in case TLM keeps running off to the top. It looks like these two trades were coincidental, but not exactly linked. Just someone with two different outlooks, someone blasting away in the calls and someone lifting a higher strike. We're seeing vol usually at about 35% here, and historical vol at about 27%, so a bit of a pop here for the realized versus implied disparity we're always talking about. This is, of course, down quite a bit from the record levels it was setting a few months back of nearly 50% out here in TLM. So that CEO stepping down, really lighting a fire under the calls and under the stock itself. Moving on up to a more broad-based name, we have some block trade fever here in XLF. Too bad Tusaw's not here. That's one of his favorite names, of course, the Financial Select Spider. And we saw a bunch of blocks going up in XLF today, starting off with the OC 15 puts. They were purchased about 5,400 times, lifting the offer this morning for about 16 cents. That volume has since gapped up to about 15,000 contracts for the total day, actually more by the time of the close, I'm sure, with open interest of well over 50,000. So the bulk of these appear to be opening, though, on these lifting offers of these October 15 puts. Moving on to the Nove 16 calls. This is another large block trade. Several of them appear to be linked. We saw the Nove 16 calls being blasted out 10,000 times, hitting the bid for 32 cents against an open interest of nearly 50,000 contracts. Not surprising given XLF. Every strike has a ton of open interest on the very active name. This blast of these calls was apparently linked to an upside buy here of the D17. So we have a ratio time spread going up here, selling the Nove 16s 10,000 times, buying the D17s on the offer for 14 cents 20,000 times, so a 1x2. We also saw the Nove 17s going up 10,000 times, more mid-market with about a little bit better than an eighth for those of you who used to trade the teenies. I'm sorry, better than a teeny for those of you who used to trade the teenies and the eighths back in the day. 6.5 cents on that trade, obviously going up on splits. About 22,000 open on that strike as well. So a lot of big blocks going up, and you could really parse it. It looks like the 1x2 is what went up, but you can also look at that Nove 17 block, also 10,000 contracts going up around the same time, and it makes you wonder exactly what was going up here in XLF. A lot of size blocks. I know, Sebastian, you like to watch XLF at all. You watch this activity going up today?
You know, I just think it's all this QE3. You should see that kind of activity. You've got a lot of people with misplaced beliefs that QE3 is going to happen, and so they're betting in different ways how that's going to affect XLF. It makes a ton of sense.
So you're leaning towards the no Bernanke put this Wednesday side of the equation?
Well, what do we need to put for? The market's at an all-time high, almost near an all-time high.
I'm not arguing with you. I'm just getting you to clarify your position here for the listeners. John and I had a nice, interesting discussion of this earlier about how we come out on this one, and it certainly seems, given the jobs number on Friday and the activity today, that people are starting to lean heavier towards the "it will happen" side of the equation. I tend to agree that there really is no need for this whatsoever, but the furor over it certainly has increased quite a bit today. Speaking,
yeah, I agree with you too, Mark. Over at the option pit, are you guys still looking to sell volatile? Because I know that Andrew was.
No, we closed about everything last week, and no, we're not short vol the same way we were anymore. We took off all of our VIX, all our VXX, really cut back on XIV. The only place we're still short is the middle part of the curve. If you look at where the futures curve is priced, it is at all-time highs. I mean, it is crazy. I've never seen the front month this low and the back month this high. So that's definitely a major issue.
I know you guys were leaning long a lot of time spreads of late, where you were short gamma and long vol. You guys are starting to reverse that now?
Yeah, absolutely. 100%. So we're now basically long a little near-term VIX and then short longer-term stuff. You know, we thought that going into the day, the VIX 16-19 call spread for 30 cents was just too cheap, so we started buying it. And we're happy we did.
Good old VIX cheap call spreads. Where did that front month future go out today? Since my screens are all moot.
Yeah. It went out pretty, it went out, we're like right on top of each other. The spread between cash and the future is only 20 cents.
Yeah, 16.45 in the SEP future.
No.
But you're right, though. Go out 6 months and you're mid-20s, right?
Yeah, we're 27 in April.
When's the last time the spread between the futures and the cash was that tight, aside from like expiration moment?
That's right. That's what's so nuts. Normally, for the spread to be this tight, you'll see the VIX at 22, 23, 24.
Yeah, that's what you typically would expect from that range. But down here, this is definitely perhaps uncharted waters from a VIX perspective. Certainly not used to discussing that close of a parity between the futures and the cash. Usually the narrative is, oh God, look at the premium, look at the premium. All right, and before we close up here in the old odd block, we got to dive into a name I'm certainly familiar with. I'm sure Sebastian and probably Grigas, you are too. You both have young kids, and that is Leapfrog. They make all those essentially mock iPads and all those fun little tablets for little kids that all the kids love to take, and a lot of parents love to give to their kids because it spares their iPad and their tablet from being covered in peanut butter and everything else. Well, this name, not exactly lighting up the old tape today, or they are, but to the downside. It's they announced a couple of days ago they had to come out with a lower than expected price for its new learning tablet. If you guys remember last year, Black Friday, their mini iPad kind of knockoff was the hot toy of the year. You couldn't really buy it anywhere. And now to come out this year and come out with their new learning tablet and have to slash the price dramatically, well, the street isn't loving that exactly, and the put buyers are out in force today. The name closed today at $8.35, down nearly 9% on the day, and this is the second day in a row that this name's really been hammered. We saw people flocking in to buy puts. The D's seem to be where the longer term stuff, for the most part, decent March, really, where the bulk of the activity was focused. We saw the D7.5 puts picked up nearly 3,000 times, lifting the offer for about 85 cents. There's some substantial open interest on that strike, so it's possible that could have been some closing, about 11,000 contracts, but it looks like the bulk of it was opening positioning here. We also saw the March 7.5 put, so that 7.5 strike where the action is, on about another 1,000 of those going up, lifting offers around $1.20, in the range from $1.20 to $1.50. That's on pretty much zero open interest, so all opening positioning there in March. So people rolling out long term, thinking that the future for Leapfrog is not exactly bright. This is we saw a 6x volume day on Leapfrog with almost about 6,000 contracts. So a substantial increase. Second day in the last 3 sessions that we've seen a substantial spike in ADV here for Leapfrog. So, John,
I'm shocked this is a public company. Jeez.
Yeah, I wasn't really aware of them.
I was cleaning out the garage this past weekend, and I found one of the Leapfrogs things that we had sitting at the bottom of a box, and my daughter was so excited, it was like a new toy. She was out there on the couch playing with it. But what's the spread between like used tablets and iPods versus a brand new Leapfrog?
It's pretty close now. You can get a used iPad. You can get it refurbished for probably $250, an iPad 2 particularly. Whereas a new Leapfrog, that tablet was $199, I believe. Their high end one they came out with last year. I don't know what the pricing is on the new one that they just announced, but it looks like.
Well, yeah, that Google tablet, $199 for 8 gigs, and 16 gig is $249. But I mean, yeah, they're made out of plastic, and that makes it better. You don't feel as bad when it breaks. But
yeah, in many ways, the resurgence, or I should say, the explosion of interest in the 7-inch, $200 and cheaper tablets has destroyed this market. Because when the iPad was starting at $500 and going to $800, even $1,000 on the high end, it made sense to buy a $150, $200 toy to give to your kids because that was protecting your investment. It was essentially a put on your iPad there. But now that you can go out and do what you did, John, get the Nexus 7, a very competent device for $200. Why are you buying a toy for $150, even $129? You know, it makes no sense.
Yeah. I bought my son's iPod on Craigslist used for $60. That's already cheaper than a Leapfrog.
That was other things you do on Craigslist, my understanding.
I think they banned most of John's favorite activities from Craigslist.
Yeah, I got to go to Backpage for that now, guys. Come on, or whatever it's called. But the iPod, yeah, $60 on Craigslist, and then I come down. You know, he's old enough where he gets himself up in the morning now, which is like a godsend for all you new parents out there. But I go downstairs and he's playing my tablet. I'm like, come on, I just bought you this thing. He's like, this thing's better. I'm like, for another $100, I'm already there, And now that, and I'll talk about this in the Express Block, but, Kindle just came out with their Fire 2 and like 2 other tablets, the Paperwhite and then their 8.9-inch one too. I mean, I got to think that Amazon and their almost closed ecosystem kind of mirroring Apple is gonna kind of start to compete a little bit here.
Yeah, and it looks like a lot of people are betting heavy that that closed ecosystem and Google, the 1-2 punch, is going to spell the kiss of death here for Leapfrog, because these are some hefty downside bets, and they're not leaving too much room for this name to wiggle.
No, and you've got to have Amazon. I think Amazon is just the long-term thinking of Jeff Bezos is shocking, but the man is smart, and I was I'll be interested to see what the next stock that's going to do a Google/Apple, even despite its huge market cap, could be Amazon.
Yeah, well, it's funny. The street doesn't love the services model. They like when you make money on the hardware, apparently, because they didn't really reward Amazon too much for their devices. And they don't like the fact that they kind of give them away at cost, kind of like Google does.
What they really like it when you have a item that gets people addicted to your services, or when you have an item that appeals to stupid college kids that like to protest despite the fact they're entitled.
Again, a vague attack at the old Apple user. Very vague on that one there, Mr. Sebastian. But yes, I agree. I'm fully in the Amazon camp. I admit it. I've been sucked into their ecosystem, and I could not be happier. So I'm taking a hard look at these new Kindle tablets as we're looking at getting some additional devices here for our staff, what we should use. Mini iPad, perhaps, or Nexus 7, or perhaps these mini Kindles. There's a lot of
or
a lot
of
players.
Choice, Mark. A used Leapfrog.
Yeah, I'm gonna say. I'm sure my staff would love to play the counting game over and over again all day on the Leapfrog. All right, and that's gonna do it for the old odd block for today. And now we're gonna dive right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Mr. G, this is, of course, the portion of the show where you take the reins and I get to sip a nice, refreshing beverage and soothe the old vocal cords. So, sounds like you have a lot of Amazon on the old trading desk today.
Yeah, I thought it was interesting what Mark said because, to kind of back up his point, we are seeing a lot more calls about Amazon, just people putting out feelers out there. I wouldn't say we're going to see the growth that we saw in Apple, but it's kind of getting that buzz on the desk where people are, hey, what do you think about this? They just want to discuss it. What are their products? Do you own any? Do you trade it? And, Priceline, Google, Apple and now Amazon have kind of fallen into that group where it's become heavily tradable. And I believe it has weeklies as well, which definitely helps the options business for us. I've seen more people just on a day-to-day basis use or fall into that Amazon ecosystem. People might say, oh, it's just an online store where you buy used stuff. Well, it's a lot more than that. Started with their Kindle Fire. That was their first colored one, I believe, and that price point that really no one else was smart enough to test out. And a lot of people say, hey, they just sold these Kindle Fires just so you would get into their ecosystem or start using their website, which is somewhat true. But, I think they make $30 to $40 off of them a piece, and they sold a few million of them, so they're not doing too bad. But once you are in that ecosystem, then you get hooked into something that's called this Prime. And I think long ago you said, are you on the Amazon Prime?
Oh, yeah, I'm a Prime junkie.
Yeah,
I got sucked in a couple of years ago, and you never get out. It's a black hole. But it's a nice black hole to be in.
I'm a Prime junkie as well. I don't know if you knew that. I
signed up last month. It was splashed. I went to Amazon.com, and I was already signed in, and it splashed right on there. Hey, try it for free for a month. I was already going to buy a new Blu-ray player. As everyone knows, I took a hammer to my last one, and I said, hey, I'll take free shipping in 2 days. I mean, that's incredible. So plunked down my hard-earned money and easily signed up. And not only is it the free 2-day shipping, but it's also like a Netflix or a Google Play. I mean, they have the free streaming media. I got guys on the desk that live in the city. They don't have a car. The car's got 5 tickets on it. They'll order stuff that they would normally buy at like Jewel or Costco. A guy buying shaving cream. I'm gonna run out of shaving cream. It's $3. It's free shipping. I got guys here that buy bulk food or bulk vitamins off of Amazon. So it's not your everyday used product and books and Blu-ray Blu-ray players and CDs. I mean, people are just buying everyday stuff on there now. And
it's my first destination. It's my first choice for if I'm buying anything online. I stop there first, and if it's even remotely close to any other price, then I'll just buy it. I save it, especially with the 2-day shipping. Particularly if you do it in the city. I mean, I'm not sure if you've been using it too long, John, but in the city, the distribution center is so developed, you get it free 2 days. Sometimes it'll even come same day. It's so fast. So it's ridiculous.
Well, one of the things that made Apple so good was when the current CEO came in there, not as a CEO, but as underling, and he revolutionized the way that they get their products and inventory.
He made the trains run on time.
Yeah, I mean, the distribution. I think he brought it down to like a 24-hour period is all the stock that they had, so they never were worried about having out-of-date product. They could switch over and modify and make a new product without having all this inventory go to waste. And I mean, I think Amazon has 16 distribution centers across the country, and I get everything before the date that they say it's going to arrive. It's really neat.
Yeah, it certainly is, and I've certainly drunk the Kool-Aid quite a bit myself. I have a Amazon box or two arriving almost every day, it seems like, here at the Soy. I'm definitely in the same camp as you, John.
So, other than that, expect, of course it doesn't go straight up, but I mean, you can see what it did after its earnings, kind of similar to Apple. It really rebounded. We got a couple calls too on this one, and special dividends can always be a little bit tricky. We got a few hundred.
What would OX know about special dividends? I don't understand.
Still remember that, huh? That was a tough patch, I guess. It's hard to explain a special dividend, and maybe I'll give Sebastian and Longo a chance to kind of give us their input on the 4 important dates of any dividend. You have your declaration date, and the stock that I'm referring to here, if you guys want to pull it up, is H&E Equipment Services, which is HEES, Henry Edward Sam. Declaration of a $7 special dividend, which is quite hefty, declared on August 20th. And here are the important dates. We have a record date of September 5th, a payable date of September 19th, and an ex-date of September 20th. So I don't work in the business. I have my day job. I own this stock. I see they're having a special dividend. How the hell am I supposed to know how long I'm supposed to hold this to qualify for the dividend?
The payable is pre-X, eh?
Yeah. And the record date is the 5th, which is just over 2 weeks prior to the ex-date of September 20th. So you have September 20th is your X, your record date is the 5th, and your payable date is the 19th.
Yeah, that's a bit of an odd structure for that. I'm curious to see as the X date approaches how the typical div players will play this one. If they're
Well, I think what you have to do is look for maybe a sell-off on the 19th. I've seen this in some other special dividend stocks. If you get a chance, you wake up early that morning on the 19th, take a look at the pre-market activity for AGES. I bet not only will the volume be more significant than normally is, but you probably see it down a few bucks. It might be a good opportunity to scoop it up because a lot of people believe that payable date, or sometimes maybe even the record date, is the date they need to hold it until, and then they can sell and get out. But just to clarify, you have to hold that stock into X date, which is the 20th, to qualify for that dividend. They may look at the record date of the 5th to kind of estimate how many people they need to pay out, what that total is going to be, but you do have to hold it into X date for any dividend, including a special dividend. But just for transparency, they can do, I think, and any dividend, especially special dividends, they can do a better job for the common shareholder when it comes to letting them know the date that they have to hold it to qualify for the dividend.
I'm looking here at the strikes and at the open interest, and it looks like all the standard div players will be disappointed in this one. There's no open interest to speak of in any of these strikes unless you're going to trade the 17 halves, which are pretty close to the at the money for a div play. 24 contracts, 14 contracts. There's not too much juice to try to squeeze out here in a div play.
You recall some of the option trades that we saw when when our special dividend went out, and people were buying that like $20 put for $1, thinking they're going to make $3 on it. I mean, it was poor.
We were getting bombarded by emails and calls here about what's going on with this. This seems like free money. I was like, call Grigas.
Yeah, tie up his phone line. So just be aware of that one. And sometimes you'll see some more special dividends come out. Hold it through to the X date. You can sell it on that date and still qualify for the dividend. If you have any questions, email Options Insider.
Yes. Just send it to me, and I will just quickly redirect it back to Grigas. Well, thank you for that, John. A lot of interesting stuff. A lot of Amazon love in the Express block today.
Yeah, absolutely.
So we see how the desk is leaning those. I've been touting Amazon on this show for quite a while. They haven't really been getting the love that the names like Apple and others do, who are near monopolistic in their grasp of their marketplace. But Amazon's doing a lot of, in terms of interesting things going on. Amazon certainly has kept my interest for quite a while, and many of my dollars of late. So it certainly seems to be working. So one by one, John, they convert us to the dark side, and that's how Amazon becomes the next Apple, the next monolith. All right, that's going to do it for the Express block. And now, since we're running long, we're going to dive right into Around the Block.
Around the Block.
All right, and those car horns mean it's time to peer into the future and let you know exactly what we're watching on our own screens here. And, of course, we talked about it a lot on the show. The two big things of this week, at least until our next episode on Thursday, are both happening on Wednesday. One is the Fed, and I think pretty much all of us here on the panel have come down with a resounding thumbs down on whether the Bernanke put will be exercised on Wednesday or not. All three of us leaning towards the no end of that equation. Of course, the other big event, the other index that is making news on Wednesday is, of course, Apple and their big announcement. I'm sure Tusaw will be watching it. Very low BBI that day, I think. But he'll be watching that one. We'll wait to see. I'm sure the street will kind of shrug initially at whatever they announce, because it won't be that exciting, and then people will beat a path to the Apple stores to buy this thing, and then the stock will take off again in probably a few weeks or a few months. So that's usually the path they followed of late. We'll see if they follow that path as well. Mark, guys have been trading in and out of Apple at all lately, preparing for this big announcement?
Yeah, I mean, I was planning on going short on the announcement, but they may have gotten ahead of me today. Apple typically takes a big kick in the shins after they say something, so that was kind of my plan. But they may have gotten ahead of me, so I may have to flip-flop things and go long. We'll see. One of the key things to a trading strategy, guys, is your strategy should be, if you have a theory and your theory is wrong, change your strategy. All right? Don't try and force something. Otherwise, you're going to lose a lot of money.
I tend to hold my positions till the bloody end. I don't know. It kind of works out historically. I don't know. We'll see. Force that square peg into the round hole. But so you're on record now saying that you are an aggressive Apple buyer and that all out there should love all things Apple and buy their products. Is that what you're saying? Those are your words verbatim, I do believe. All right. Aside from Apple and the Fed, anything catching your eye this week, Mr. Sebastian?
Just I'm watching that VIX. That's where I think the middle of the curve is a sell, the front of the curve is a buy. Not as much anymore, but still. Well, yeah, the front of the curve, 20-cent spread. The front of the curve is absolutely a buy.
And Mr. Grigas, aside from Amazon, what are you watching for until our next show, at least?
Those two headlines. I think when is that High Court in Germany going to decide on the EU verdict? I believe that's Wednesday as well too.
Yeah.
So keep an eye on that. And then at the end of the week, for the normal economic releases, we got retail sales, which if it's bad, it's good, and if it's good, it's good. So we'll see if I guess by that time it'll be too late, though. We'll already know about QE3. So we'll have to keep an eye on that as well.
Yeah, retail sales are only really relevant for how they feed into the Fed. So if Fed's already a done deal, then retail sales, some of their powder, I think some of their inputs and some of their impact are probably a little bit lessened, I would think. So yeah, those are the two main events, obviously three actually on Wednesday. So that's what we're watching. I'm sure a lot of you are watching that, so we'll see how it unfolds. We'll be able to discuss it on our next episode, but unfortunately that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I want to thank my cohorts, my partners in crime, for joining me on the show today, starting off with you. Mr. Grigas, what is coming up in the land of OX, sir?
Of course, we always have our events that I know we mention every time. I believe the next one is in LA, but if you get a chance and you have some time, check out some of our webinars. We've updated them weekly. The site tour for a lot of new BX clients that have moved over in the past week. You may want to jump onto one of those and take a look at the site and see what we have to offer. And then I'm going to be out in New York on Wednesday and Thursday. It's an active trader conference that I'm going to tag along and watch our esteemed CEO, Joe Vitri, work one of the panels out there. So hopefully I can bring back some good stuff for next week's show.
And Mr. Sebastian, what is coming up in the land of the pit?
Thursday, I am doing a free webinar, 4 o'clock Central Time, with myself and David Peltier of Stocks Under 10 from thestreet.com. It's going to be Stocks Under 10, how to find those values, and how to trade options with them. Absolutely worth a listen.
Good stuff. Thank you for that, Mr. Sebastian. And since we're teasing upcoming appearances, this is not one really for the listening public, but an interesting one nonetheless. I'll be grilling the exchange CEOs at an FIA OIC conference coming up later this week in New York. So I won't be on the show on Thursday, but if you have any interesting questions you'd like me to relate to the heads of the major options exchanges, send them my way, and perhaps they will make it through on the show. Sebastian, John, anything you want me to ask the heads of the exchanges, perhaps on your behalf?
Well, I'll be there with you, so I'll whisper in your ear.
Are you coming to the OIC FIA show?
Correct.
Oh, okay. I thought you were talking about something else. Okay, you said active investor. I was confused. All right, so yeah, you'll get to see me. You get to see me work on Thursday morning then.
Nice.
Fun stuff, bright and early. Mr. Sebastian, anything you want to ask the exchange CEOs before you go?
Nothing that you're willing to ask them.
Probably not. Not in mixed company, at least. Perhaps behind the scenes. But that is going to do it for this episode of the Option Block. Before we go, I do want to mention what I teased at the top of the show, that if you did surf on over to the Options Insider today, thankfully we were up. We weren't impacted by the GoDaddy changeover, but you might have seen a different layout, a different look, a different design. So if you've been interacting with the shows or you're looking to do that on future episodes, we made it a little bit easier, even though it might be a little bit different when you first use it. We've added comments now to the Options Insider. So you can come in, you can comment on, you see one of Sebastian's articles on the Options Insider. You like it, you don't like it, let us know there in the comments. If you want to participate on the show, make some interesting comments in our network there. It's a simple comment system. You've used it on many other sites. Discuss should be very, very easy for you guys to grab hold of it. And it brings the forum a little more into the open on the site there. It makes it easier for you guys to contribute to the show. So if you have a question or a comment, by all means, put it there in the comment sections. If you have some interesting ones, you can put them on the show notes. You can put them on other areas. We'll find them. Don't worry. And if they're interesting comments, maybe you can even flag them for Option Block if you want to have us look at them for the show. And then if they're interesting, we'll read them on the air. So hopefully that will lead to making it even easier for all of you to participate on the show going forward. And so that and a lot of other interesting changes under the hood going on at the Options Insider to make it even easier for you guys to access all the information you've come to know and love from the Options Insider. But that's going to do it for this episode. Of course, all of us here on the old All-Star panel want to thank all of you in the listening audience for downloading and streaming and subscribing to the program and making it such a success. And we'll see you on Friday right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.